We finished the year with 4.7 million top line revenue, and that represents a growth of 30% year over year. The important note there for all your listeners is that's been a very consistent growth number for our company. This is now the fifth year in a row that we've grown 30% year over year on the top line revenues. Probably the most important item I want to highlight for the listeners is our operational margin has improved dramatically. So in 2024, the entire business was operating at a 28% gross margin. I'm happy to report that 2025, we closed the year with a 40% gross margin. It just indicates to everybody how efficient our internal operations are becoming.
Stardust Solar is a fast-growing global provider of renewable energy systems and services. The company just released its 2025 financial results, and CEO Mark Tadros is here to review the quarter, the year, recent milestones, as well as upcoming catalysts for 2026 and beyond. Please remember, this is neither recommendation nor investment advice. We're here to learn about the company. I'm Martin Gagel with Market Radius Research. Mark, thank you for joining us.
Hey, Martin, good to see you again. Thanks for having me.
You just put out your year-end results. Why don't you give us a quick overview on what the year looked like for you?
Sure. Yeah, I'd be happy to do that. And I also encourage all your listeners to go take a look at the financial statements. You can get them on our website under our investors page. We also have our latest MD&A posted, for in-depth color about the statements. Some good high-level notes that people should know that we're very proud of. We finished the year with 4.7 million top-line revenue, and that represents a growth of 30% year over year. The important note there for all your listeners is that's been a very consistent growth number for our company. This is now the fifth year in a row that we've grown 30% year over year on the top-line revenues. Another really important note, I would say probably the most important item I want to highlight for the listeners is our operational margin has improved dramatically. So in 2024, the entire business was operating at a 28% gross margin. I'm happy to report that 2025, we closed the year with a 40% gross margin. It just indicates to everybody how efficient our internal operations are becoming. And then finally, another good KPI, a simple KPI for people to follow, is we went from 83 franchise territories in 2024, now operating at over 102 franchise territories around the world.
And those territories, since you ended on that, those territories are split between Canada, the U.S. Are there any international territories included in that number?
Yes, there are actually. So, there's been a lot of press about our recent expansion into Zambia. So that was a big step forward. We have a fully operational franchise in Zambia with a large PPA underway there. But we also added a franchise in the Caribbean, in Antigua and Barbuda. And, the one thing I'll say about the Caribbean, it's a very strong target for us going into 2026. We have plans to further expand there into the Bahamas and into the Barbados in the coming months.
Going back to your revenue growth and your margins, it's really good to see your margins expanding. Can you talk about what's driven that margin expansion? Is it all scale just by the growth in the revenues? Is it a shift in revenue mix to more higher margin products and services? Can you talk about that a little bit?
And it's exactly what we've been promising investors from the beginning, that we'd be focusing on growing our franchise network. And that automatically translates to a more profitable business model. By definition, the larger franchise systems get, the more profitable the bottom line becomes. So you'll continue to see this trend, and even into Q1, where the growth of the franchise model creates a bigger pool or a bigger percentage of high margin business at Stardust, ultimately leading to a bigger bottom line.
The work that you announced in Zambia, that was announced in 2025, but there was no revenue, maybe with the franchise, I'm thinking itself, signing up the local franchise, but on the project itself, was any revenue or profit recognized from that in 2025?
No. So, but we're excited to announce that 2026 will have substantial updates, and that some of those will be coming soon. But we expect that the actual project in Zambia will be producing revenue this year in 2026. Now, you got to remember that's going to be additional high margin energy revenue for Stardust on top of our organic growth that we're developing through the backbone of our company, our franchise network.
You showed nice growth in revenues and margins, but unfortunately, it was still a loss year for you. You are projecting profitability or EBITDA profitability in 2026. Can you talk a little bit about last year's loss and your expectations for profitability in 2026?
Yes, and it's a fair comment. We still did show a loss for 2025, but our guidance is saying that 2026 will have a positive EBITDA year. Now, again, I'd encourage your listeners to go take a look at the financial statements, and I can point to a few specific accounts on those statements that are one-time in nature or non-reoccurring or simply just our first year as a public company. Before I get into the specifics, it's really important for everyone to understand 2025 was our very first year as a public company. So we had some really large expenses, for example, in advertising, promotion, IR services, things that don't directly contribute to the operational growth were big expenses, and we've already cut contracts there by 50%. So you can expect an improvement of 50% on that account in our expenses. Furthermore, professional fees. We spend a ton of money on lawyers, auditors, accountants, financial analysts. Now, a lot of that stuff is still coming back in 2026, but we've been able to be a lot more efficient in the way we distribute those contracts, and we become more efficient internally and not necessarily, requiring legal to dive into every single issue at such a high billable rate. So there's two big accounts there that are going to be significantly improved in 2026. And then also share-based compensation was significant in 2025, whereas we think that'll come down by at least 60% in 2026. And there's also the bad debt account, which was attributed to one or two anomalies, basically large franchises that we ended up closing just based on poor performance. One was in Pennsylvania, for example, which created a big dent on our bad debt. But the good news is for your listeners, once you strip out all of those, I'm going to call excessive expenses, you can expect the expenses to come down by about $1 million or $1.5 million compared to what it was in 2025. Now, if you add that with our continuous 30% year over year growth, you're looking at a company that's going to do, hopefully between $6-7 million top line revenue and producing that bottom line EBITDA that everyone wants to see.
Looking out into 2026, where it's shockingly already almost halfway through the year, what are the drivers of growth going to be? And I suspect they're like Canada's, especially now, is a much different market than the US is. I'm impressed at your ongoing traction within the US market, given the changes in the tax structures and subsidies and tariffs and all that are going on there. And then you've got your international markets. Can you, in each of those, call it quadrants, talk about what the outlook is there, what's going to be fueling the growth?
And you're right. It has been a little bit more difficult in the US to sustain that heavy growth that everyone's looking for, although we continue to penetrate the market and open new franchises there. But the good news for investors is the backbone of our company is in Canada, and there's a lot of opportunity coming in 2026 for Stardust in Canada. The first place I'd like to start, we've often talked in the past about the growth of our commercial projects and our commercial portfolios. Just here in BC, there's new legislation coming out that large commercial scale projects are now going to be paid 10 cents per kilowatt hour for the energy they produce from solar, but only charged for the operation of the building at 6 cents per kilowatt hour. So that actually means that any large commercial scale building in BC that's got solar on it is going to be producing at almost 1.5 times what it's costing them to buy energy. So there's big opportunity there. We're continuing to pick up new commercial projects and grow that part of our business. Now, just that alone can have a significant growth to our top line revenue, just adding a handful of projects. So the 30% year over year may be surpassed if we're really successful in commercial projects. Furthermore, on a federal scale, Martin, you might have seen that just yesterday, the Carney government came out with a new announcement, a new, call it a forecast or an outlook, a bill that they're going to be investing $5.9 billion over the next 5 years in the skilled trades. First off, I think it's a brilliant move to create more jobs in skilled trades and get more red seals out there, get more boots on the ground operating. But what people should know is Stardust is the single largest training facility in Canada for people entering the renewable energy trade. So there's going to be a ton of opportunity for us to grow our training client base and also pick up new franchisees who are entering the trades. This is fantastic news for our business model. And I should also mention that our training department is one of the highest margin arms of our business. So again, we're reinforcing high margin business that's hitting the top line and the bottom line of our financial statements.
And in the U.S., you've announced some recent new territory wins or franchisee sales. How is that market going with the obviously energy and power is a hugely needed in the U.S. with the rollout of all the AI data centers. And there's a lot of congestion in there. With that's a bit of a hiccup in the whole thing. So there's a huge opportunity, but it's not exactly a most favorable to renewable on some levels of government. So how is that shaking out for you?
And I would say it's not, maybe not favorable yet, but it will be. And that's, again, part of my messaging is you're going to see the demand for energy that's coming even in the next 6 months. You're going to feel it, but definitely over the next year or two. That demand for energy is going to create growth in all energy sectors, including solar energy. I'm happy you touched on the data centers and the AI component because we've already been approached for specialty projects for these types of businesses. Now, again, I can't divulge too much there in terms of specifics, but what you should know, it's not just about building a solar field for them. What they're actually looking for is to partner with us and capture our carbon credits that we produce all over the world to offset a lot of the energy demand that they have at their business. So it's a new vertical for us. It's a new opportunity, but still in its infancy. But you're going to see there's going to be a lot of demand for all sectors in the energy markets.
Well, it's been noted that the increase in power demand by data centers, as well as just the electrification of so many things, is driving up consumer household power prices, which the higher the power prices are, the more affordable renewable solar and battery storage systems become. So I would think that the one of the secondary, tertiary opportunities driven by the data center boom is the higher power prices are going to cause more people to invest in alternative energy sources, which creates an opportunity for you.
You're absolutely correct. Just this morning, I met with a great entrepreneur out of Utah, a fellow named Owen, who's working on similar type training programs. And he says that the biggest pain point that he's seeing across America right now is the cost of electricity. So maybe there isn't a focus today on solar, but again, as that price rises and it's getting more and more dramatic, I think he was telling me it went up 8% year over year, way surpassing inflation growth, and that trend will continue. As those costs of electricity go up, solar, all types of energy are going to be in demand, but specifically rooftop solar at the building level is going to neutralize those buildings and they'll produce their own energy from the sun. So the demand is coming. There's no doubt about it.
All right. And then going on to international markets, you've obviously got your big flagship project in Zambia, which the utilities scale. I'm curious, in that Zambia market itself, are there other opportunities you're going after, or is your franchisee going after, or is there enough sort of, they're busy enough with this one big
Uh,
project and the smaller ones, let's say, is for another day?
I'll be careful with this question because, yes, this is a very big project. I would say it's going quite well right out the gate. And we're focused on delivering this one project for our investors before we go too wide. However, yes, there is other opportunity. We've had requests from, the governments there to also build out residential communities, microgrids, help on a micro scale in Zambia as well. There's also been talks about expanding our PPA and doing more. What I say to everybody is baby steps. Let us prove to you that the initial phase one of this project comes to life, and then we'll be excited about expanding opportunity in Zambia.
Should investors look at maybe new African locations as well as Caribbean locations for international growth, or other parts of the world? It seems to be a pretty like, you're still a relatively small company, and that's a pretty big footprint to manage.
Yeah, small today, big tomorrow is what I
All
would tell
right.
people. And as the investment comes in and we scale up the operation, this thing is going to get big quick. Yeah, we have demand. One entrepreneur in the Congo wanted us to help him set up an operation. Tanzania. I should tell people we're not entertaining that now. It's simply too early. We have enough on our plate, especially in Africa. But we do have boots on the ground in Africa, legal teams, local corporations. So we're well established for future growth there. And again, it's an emerging market. There'll be a lot of opportunity. However, from that one opportunity, we've now garnered interest from Mexico, Peru. We expect to open an operation in the Bahamas later this year. Even Barbados has come to us asking us to build out their solar training platform. So the international exposure has done us a lot of good, and it's allowing us to quickly diversify our revenue streams globally rather than just focusing on North America.
Okay, we've got to wrap it up here. Mark, any final words or thoughts to leave investors and viewers with?
Thanks for the interview today, Martin. I really appreciate it. The only thing I would say is I want to reinforce the fact that the demand for energy from, all different walks of life, call it AI, data centers, even robotics, is going to drive all energy sectors. You'll see the demand for solar energy and other renewables start to climb in the very near future. I think it's evident that it's just a supply and demand issue with general energy and grid capacity. So I'd ask investors to watch our story and to follow those energy markets. And once again, I really appreciate your time today, Martin. Thank you.
All right, Mark, thank you very much. I appreciate the update. Talk to you again soon.